It is already December, which means this is the last Dukascopy Bank Sentiment Index we will be discussing in 2013. So today we will compare some of the results from last year's November poll with the findings of this year's latest November survey to analyze the main drivers and changes in the sentiment index. Giving her interpretation to those questions is Professor Taha Chaiechi from James Cook University in Australia. Professor, thanks for joining us. Starting off, when we compare the sentiment index from a year ago, we observed the 6-month economic outlook for Europe benefited from the strongest gain of 0.15 and now stands at 0.53. However, the economic expectations for North America and Asia Pacific are little changed and remain fairly positive. Professor, do you believe Europe will be able to catch up with the prospects of North America and Asia Pacific, which have been rather stable during the past year?
Yes, Europe has been struggling with the prolonged and double-dip recession for more than 2 years now, but I do believe that it is able to catch up with the prospects of North America and Asia Pacific. As a matter of fact, after this long freeze, we might be able to see some slight uptick and improvements in early 2014. Some of these improvements can be due to the rather optimistic economic growth in Germany and economic expansion in Italy and Spain that we observed in the recent months. This is complemented by the fact that Latvia is to become a member and to adopt Euro on January 1st, 2014, and economists are predicting that Latvia after that becomes the fastest growing economy in the region. Outside the Eurozone, the UK is expected to do well with the forecasted growth of 2.2%. All this together may bring some good news to the labor market, lowering unemployment rate by something between 0.1 to 0.2%, which is not a major reduction, but it is a step in the right direction. So while European GDP has been stagnating in 2013, we might actually observe some improvement in 2014.
Next part of the sentiment index is the economic development stages. At the end of last year, the Dukascopy Bank poll indicated that according to academic experts, Asia-Pacific economic growth was losing pace and economic slowdown was expected in 6 months and 3 years. However, it appears that now the surveyed professors are more optimistic about the region's outlook, and the majority believe that Asia-Pacific will expand in 6 months and 3 years from now. Professor, what to your mind was Asia-Pacific able to achieve within the last year to improve the anticipated outlook?
Okay, to me there are two main reasons behind this improved anticipated outlook. Number one is that inflation rate is kept low and stable in the number of countries within the region. Number two, several structural changes and political and economic reforms have taken place in strong economies within the region. These two factors together helped foreign capital to continue to inflow into the emerging Asia. I would say the most influential economies in 2013 within the region are China, India, Japan, and Singapore.
Finally, last year, the November poll showed that the 6-month economic outlook for all the regions in question was in the uptrend. However, during the last 5 months, the prospects were strongly volatile. Professor, what do you believe broke the continuous improvement in the economic expectations?
Okay, the main reason from my point of view is that the economic recovery has been weaker than anticipated, but there are factors contributing to this outcome. Number one in my list will have to be crisis in Eurozone. With much of the Europe in recession, European effective demand for goods and services, particularly imported goods and services, is significantly declined, which resulted in a negative impact on many of the world's leading economies. And so many US companies also have cut back on their capital spending in Europe because of this increased economic uncertainty. The next one in my list will have to be US fiscal cliff, budget tightening, and the US government shutdown, which is of a great importance because not only has impacted local economy in a very negative way, but also increased uncertainty in the global financial market. The good news about the US is that there are structural changes underway, but as far as the crisis in Eurozone is concerned, the negative pattern might actually continue for the next few months, or at least the first half of the 2014.
And this brings us to the end of the last Dukascopy Bank Sentiment Index program in 2013. Professor Chaiechi, once again, many thanks for your participation. Don't forget that more information can be found online by going to Dukascopy.com and clicking on the Sentiment Index under the Market Research section. See you next time in 2014 when we will be having a look at the December results. Happy holidays everyone and a prosperous December!